On Tel Aviv's best-known boulevard, what will soon be Israel's tallest residential tower, and probably its most expensive. Apartments in this Richard Mayer-designed residence, some with private plunge pools, start at $1.5 million, prices that a few years ago would have been unthinkable. Between 2009 and 2012, Israeli house prices rose 55%, faster than Norway, Switzerland and every other member of the OECD. Prices have surged here due to a strong economy, a lack of supply and low interest rates.
House prices have been rising so fast, especially here in Tel Aviv, that many Israelis find themselves priced out of the market. They'd love for prices to come down, and in that sense, they're not alone.
Developers like Yigal Zemer say they also want cheaper homes. Showing me around the $50 million penthouse, he says the current situation helps no one.
Rising prices in the short term may be good for some, in the long term is bad for everyone. For the buyers, naturally, with the prices going up, it's much harder to get an apartment. But even for developers, the land prices are increasing on a steady state, and after a certain point, it becomes too risky to buy new land and to go into new constructions.
He may soon get his wish. Goldman Sachs says Israel is the most likely OECD country to see a house price crash. Israel's finance minister doesn't see that happening.
I don't think there's a housing bubble. I just think housing is way, way too expensive. I think the Bank of Israel is telling us, you go first. You make sure that the supply of new houses, of new construction is much bigger. Then you will enable us to be more helpful to the whole process.
Yet Israeli governments have repeatedly failed to build enough homes. Interest rates may fall further to boost the economy and weaken the shekel, giving Israel's housing boom yet another lift. Elliott, Gotkine, Bloomberg, Tel Aviv.